And I hope you're having a wonderful evening. We had another surprisingly calm day in the markets. And why it was surprising, because there is a lot going on in the markets. And what I really want to talk to you about today is what happened overseas. And this is what you guys pay me for. I'm going to tell you right now, this is the second event. And something happened, and it's like extreme in one area, and then in another, this is what people are going to be on the lookout for. I don't think this topic, what happened, was rare again, but we actually talked about this not too long ago. So we're going to talk about bonds. We're going to talk about the rest of the world. We're going to talk about today, the plays. I got pretty pictures. We're going to talk about the market, the stop and go. Oh, my brother and sisters, we got a lot in store. So I hope you're feeling good. My voice sounds deeper because I'm post-workout. I'm like sitting back, bro. I'm chilling, bro. You know that? I'm ready. I'm about to just talk to you about ball. I don't even know why I'm live. I just missed you, man. Good evening. How you doing, baby? What up, Mr. McAllister? Kurt Kapazguli. Kapazukulu. Man, I usually get people. How do you say it? Give me the Webster's version, bro. What up, Jacobin? What up, Ork? How you doing, Malcolm, Ivy, Adam, Estevan, J. Biz, Marcus Bryant, Carson Balt, Passanat. What up, GG Liquidity? What up, Tim Whitman? Kanan, Tim Whitman is in the chat, and he was like, I'm at the stoplight. I was like, oh, you're giving me flashbacks. My dad would say he's at the stoplight, and then he'd be home like 5 hours later. Yeah, I don't know. He said, Habibi, Donel, I'm at the light, Donel. I be 2 minutes, Donel. 2 minutes. How are you, Brett? Hello, Mr. Salt. Derkio, like a Derkio. Wow, what about the Twitch? Is it Donel in Twitch? No, Donel. Hello, Lynn. Hello, Coyote. Stock Blodo, Lord Wavebone. Wow. How are you? How are you, Gus Gonzo? Donald. We talk about the market, Donald. What up, Chibs D? All right, Chad. So I hope you're ready for it, but are you guys ready to talk about it? I'm going to get right into it. Before we talk about the day, I don't think we need to. I mean, the market's here, and like I told you, even at these levels, you got to work a little bit harder. We don't have much data this week, so we'll see where it all leads us in terms of the short term, but let's talk about what happened. And do you guys know what happened last night? So it factored into today, and it didn't cause much reaction. Like I'm saying, we just had a credit downgrade. And everybody right now is focused on the big, beautiful bill, our deficit, and all of that stuff, right? Well, Japan, they didn't have, here's the funny part about it, it wasn't necessarily a failed bond auction, but it was damn near close. And why this is interesting for two reasons. One, do you guys remember we were just talking about a failed bond auction? I mean, not too long ago, you literally had our bond auction and the yields were high. Everybody was worried. You remember that? And I was explaining on stream what it would mean if we had a failed bond auction in the United States. And we were saying if nobody shows up and then they'd panic. Does that sound familiar? So we were just talking about this. Otherwise, it's not really a concept that you hear too often. And Japan had this bond auction last night. And like I'm saying, you probably go on Twitter or go anywhere. Everyone's talking about these Japanese yields. And I'll get to a pretty picture and I'll tell you the key. Like I've told you, on the way up, that's not really, it's like the problem, but it's not the problem. When you want to see the fireworks, it's going to be when the Japanese yields start coming down now after this massive rise. That's when you know the tectonic plates have shifted. So other than that, though, what just happened in the last 24 hours, it's something pretty important. So like I'm telling you here, don't be fooled. Everyone's talking about our bond market, but now that problem just shifted to Japan. So essentially they had this bond auction and buyers were not there. The biggest tail, I'll show you it when we get, I might as well get to the first pretty picture. Because I'll have to explain it, because this is what I mean where it wasn't a failed bond auction, but it was its largest tail since 1987. So you guys, we've watched all the bond auctions. You might have heard the term the tail. This is part of the results. Well, all that is, it's the difference between the when issued and then the highest when issued and then when the market takes it. That's it. Oh, the wire is in the way. Excuse my wire. Forgive me. But yeah, so essentially last night, the when issued was pretty high or pretty low. And then when the demand came in, nobody really showed up. So the yield was gigantic, leaving you with the gigantic tail, the largest since 1987. Like I'm saying, people are saying that it's borderline a failed auction. So that's the first thing. And then, like I'm telling you, with the rates going up, that's another. But do you guys realize now, in the last 2 months, this is the second random blowout in an Asian country since the 1980s. Does anybody remember the first one not too long ago? It was random. There was a lot going on. Market didn't really have an effect. And then shortly thereafter, we were responding to a lot of other things and trade deals and all of that. It wasn't the Nikkei. That was not it. It was very recent, though. In the last 2 months, there was another blowout very recently. Not the yen carry trade, believe it or not. No. But this is getting people to worry about the yen carry trade again and other things. Not China. I mean, depending on who you ask. Let's just say Xi Jinping would say you're correct. There it is. Taiwan. Ba-dum-bum. No, you get it? Xi Jinping? No? Okay, anyways. Point is, the Taiwan currency. Do you guys remember that the other day or the other week, month, whenever that was? It had the random blowout out of nowhere. So I thought that was interesting because now you're getting this, but now Japan is a lot more closely linked. And like I'm saying, just when it comes down to global finance and everything else, the irony of all of this is that while everybody is focusing on the United States and everything else, it's now the Japanese bond market, it's starting to wind up. And whenever, like I'm saying, when those yields come down, you'll see the fireworks. But ironically enough now, you're getting another debt blowout in another part of the world, and they have a different set of spending and all that. Or maybe it is a result of our credit. But ironically enough, though, everybody was looking for the United States and our moves and our credit following the downgrade. But now all of this stuff in Japan is happening. So that was the big thing. Keep eyes on it, because if things get quiet, if we start noticing more stuff overseas, or if there's a dynamic now where Asia gets crazy, maybe that's our black swan. Because again, for now, you're just playing the trade game and we're still waiting for something big to shift. But again, if we start watching more pops and drops in Asia and currency, the dollar, bonds, debt, this is pretty much the big issue at hand. So we will watch how that plays out. But keep that in mind. That all happened today. So that is key number one. Now, key number two, as far as what happened besides that today, it was a lot of stop and go. You didn't really get much data. You heard a lot of rumors. We got to hear about the Golden Dome, and a lot of it kind of moved after hours. There was a bunch of different rumors there. You had a couple of earnings in the morning. We're even going to get a couple more earnings tomorrow, and throughout the week a little bit smaller. But for the most part, a lot of updates on taxes. It felt like the market was making big move, and that's simply because we just stayed in a 30-point range. But it was a lot of stop and go, and I think this is the fun part of it. I hope you guys realize, be prepared. Some weeks you're going to have these crazy momentum moves. Some it's not, and it's kind of the job to figure it out. Last week we knew when to stop. That helped out a lot. This week you kind of got that again, but it was really weirdly mixed. So as far as the trading, the way it's played out, there's been a lot of events, not as much panic. There's still been opportunities on individual names, but then the ones that you play, and if it doesn't move, the decay is just going to wipe you. So it's causing a lot of stop and go. It's a little bit different. It's not as if it's, okay, you don't have to do anything, because there is random moves, but it's still in the middle of that chop. So be prepared for that. And that's why, as of recently, I even showed you guys yesterday, even on stream, I've been liking some of these volume indicators because, again, liquidity and how things are moving. Yeah, and that frustration, it's all kind of, just kind of follow the money. And there is some opportunities, but there's still a ton of pump fakes. And just wait. It's going to be choppy. Wait till we actually get back to the market moving stuff or big trade deals, good or bad, or maybe we go back to more policy uncertainty. But either way, volatility has dropped considerably if you haven't been aware of that. And like we're saying, there's this dynamic under positioning and all that. It kind of reminds me of, if you just remember, kind of how we started the year when we started moving into the higher levels. It was just kind of moving up slowly and then until everything changed. So be on the lookout for that. It's going to get harder. I think you'll have a different set of opportunities. I think keep your eyes peeled, but at the same time, be careful because if you do get caught in red light, then yeah, they're going to tax you, especially on the options or the swings. Shares are good if it doesn't swing too much, but then if volatility picks up, you are not going to like that. But that is key number 2. And finally, moving forward, short and long term, I hope you guys are aware of this. 2 things. 1, trade deals and the dollar. That's kind of what you watch this week. You're not going to have too much data. Again, the market's trying to hold up these levels. You're still doing relatively good. Today was your first red day in like what, 10 or 8? So things are holding up and chill, even surviving a downgrade. You got other stuff going on. People are waiting. So see what trade deals, everything from South Korea to Japan, more China stuff or anything in between. Again, the Saudi stuff we've been hearing about. I think we even had Elon in Qatar still. And then we heard the Golden Dome stuff today. So we'll see what we hear. But other than that, that's going to be the short-term drivers. Again, stuff overseas, bonds, debt. Watch how that impacts the dollar. Again, even the other currencies. That's going to be very important on the short term and tying into a lot of these different narratives. And then just, we're almost done with May. But remember, we're still waiting for that hard data. So is Jerome Powell. And there hasn't been a structural shift. So when it's all said and done, nothing's really changed. Yeah, that Japan thing is one part of it. But, this economy, even down in Japan, that was happening in August 24. And it's almost August 25. So yeah, but other than that, welcome to the high stakes game of chicken poker or whatever you want to call it. But we will see where tomorrow leads us. And now, let us get into the plays. So before I do that, I have more pretty pictures. So here is that, and this is kind of the main theme. So this is the Japanese yield, the 30-year, even their 40-year is hitting a record high. But like I'm telling you, even go match it up on the charts. But everyone's like, oh my gosh, the Japanese yield's going high. But if you really want the fireworks, when the yields come down after the run, that's where you're going to get volatility. So be on the lookout for that. And that's the thing, but like I'm saying, the funniest part about all of this, while everybody goes crazy over America deficits and spending, there's this. So, ironically, here's the tinfoil. They're saying that if Japan has a debt spiral, they're the biggest buyers, and then they're not going to buy U.S. treasuries, but then I think a lot of people will buy treasuries, so that's one tinfoil. Other than that, people are saying this is foreshadowing the failed bond auction in the United States. But point is, this is a big deal now. And even though you would think you thought United States was in the dog shed after everything that's gone on, but nope. I don't know if Japan already had their own problems. Some could argue that, or now maybe the U.S. is bull in a china shop, taking everybody's debt down with them. Because we talked about that. I brought it up in passing, ironically, after the debt downgrade. If the standard of credit, the United States, gets downgraded, you would think that would lead to like a re-rating of everybody. So, again, we'll see how that plays out. But other than that, that's something you got to watch. And, again, this dynamic is going to be very interesting. The other chart I wanted to show you, this one's funny because you guys know how I've been telling you about the demand and how Wall Street will do anything. This is hilarious. So yeah, yesterday at 12:30, the buy for retail, and this could even be through like pensions and IRAs and 401ks too, through retail accounts, but it was the largest on record ever. So like I'm telling you, Wall Street is underpositioned, and now retail is buying more than ever, more than GameStop, more than COVID handouts. Isn't that wild? I think this is fascinating. Very fascinating. And the way people are putting it, we heard it this morning. I forgot which analyst said it, but they're pretty much saying that retail, after witnessing what happened about like with COVID and then the money printing and all that, retail's like, nah, we're not missing it. So retail refuses to stop buying, like actually. And like I'm telling you, this is the evidence, not to mention the buybacks and everything else, but this is all adding to it. So very, very fascinating. And then you ready for a funny one? This one's just kind of funny because it highlights what's been going on. Are you ready? Are you ready for this? Dude, even gold. Ironically enough, bro, even like non-commercial gold holdings are dropping. Bro, they're underpositioned on gold. Even the the commodity accounts that focus on gold, they are underpositioned on gold. So again, this is the price of gold, but all throughout this rally, they've been selling into the high as it's just going, and then gold is just golding away, shining. And then I already showed you the 1987, and now this one, I mean, is kind of interesting. I mean, this is why it kind of has to do with the Moody stuff. I thought some of you would find this fascinating. But this is the projections. So this is like the federal like debt to GDP percentage, and then like CBO. You probably heard today people were talking about the CBO scoring, and the Republicans are like, yeah, the CBO isn't grading our thing fairly. That's why it scores so bad, because again, they are spending a lot. Like I'm saying, on paper, it is a lot, but they're insinuating some other things with growth as well as different metrics. But long story short, you see this little red line, Moody's, pretty much the CBO has a forecast for like debt to GDP for like the next like 10, 20, 30 years. And then they had an alternative, like really bad forecast, right? And pretty much Moody's pretty much like plopped themselves right in the middle on both estimates. And like, again, even the CBO, this one is the deficit percentage to GDP. Again, the CBO, they're saying 7.3. Moody's was like, nah, you're going to do 9. And then the alternative scenario by the CBOE, they're like, worst case scenario, it was a 12. So very interesting. And then what I want you guys to, like a bad boxing judge, exactly, just going in the middle. But the funniest part, this is what I've been telling you guys. Like, do you not realize this? Like, this is what I'm saying is like, yeah, obviously Moody's is political and there's other stuff going on. Everybody likes to cry politics, but like, do you guys not see the trajectory? Like, this is your debt to GDP or your deficit to GDP. Like, do you see how like we are running deficits? Like, this is World War II, mother effer. World War I, the civil effing war. That's where we're projected to be at in terms of deficit to GDP. Why? So do you see what I'm telling you when I'm like, yeah, the bond market, like, take away all of the drama. It's like either Republican, Democrat, whatever the hell you want to call it. It's like this is a very like kind of alarming issue, and it is actually like genuinely different. Again, like great financial crisis, you had a crash, you had a crisis, we do it, then we come back up, and then COVID, 2016, and we were spending, but it, as you could see, like historically, the path, we just accelerated it, and we are still going there. So this is why the debts and the debt markets, worldwide, global, everything, this is where it's kind of all coming into play. So hopefully that adds to all of it. But that is all my pretty pictures for you. So now let us get into the play. So right off the bat, Target. I think this one's going to be fascinating tomorrow. So I did make a play. I played both ways, 2 standard deviations. And this could be a long-term candidate if it really dies. But long story short, it's either going to be a big consumer story tomorrow, and they're going to talk about how bad they did or how good they did. And tariff, oh my God, the tariff. Oh my God, we did so bad. Oh yeah, we did so good despite the tariff. We did so bad. Elon made us save money. So Target, we blame the people, and we're sorry for ever selling a bathing suit with the crotch. Sorry, Target. But hopefully you get the idea, because Target has been going through a lot, and it's actually one of the worst performers on the year. It is down about 39%, I believe, which is still kind of wild, and comparatively, like Walmart and other retailers are actually doing good despite all of the tariff fears. So I think it's going to either be a big story tomorrow. Otherwise, they'll rob everybody, and then it'll move next week. So if it really comes in so in line, I think that would actually be a nightmare. That's why I think it could be big tomorrow. But I think no story on Target would be a nightmare tomorrow. Honestly, I think no story is a bad story. Let me rephrase that, because, like I'm saying, it would be a nightmare in the sense of you're going a long time of like not recovering. You get what I'm saying? Target has been doing this for 3 effing years since the bathing suit issue. Do you realize that? So this company, borderline, this is like fucking Intel of bathing suits and like consumer points. You get what I'm saying? But what's the difference? Target is not trading at book value. That's actually the biggest difference, believe it or not. So I don't know. I don't know how investors would take it, but I do think if they can't make good news, or if they can't like just say fuck it, wash out, guide down, blow it out, and then call it a day, and then bottom out and go. That's it. So we'll see. Other than that, though, yeah, they don't have Pat the Rat, but then again, I mean, Target is like, they're wild if you think about it. I know Target. I love Target, man. I'm not going to lie. I like Target. I like it at lower prices. But Target, they try to, like, do you know Target failed with Canadians? I don't know if you know about that, but Target, back just a couple years ago, within the last decade, they tried to get into Canada, and they lost a ton of money. Just because of, and like it just didn't hit, so then they had that issue, and then the marketing, like it's funny how Target became a target of Republicans at one point. That's it. And then Bud Light, and then, oh man, but I think Bud Light, I think they did a little better, but like I'm saying, it's still, that was 3 years ago, and you're still on that quarter pretty much. This is going to be the quarter that would reflect 3 years ago. It's almost been 12 quarters. Kind of wild, but other than that, watch out for Target. I got both ways. I think there'll even be some follow-up plays tomorrow too, so watch out for that. That is play number 1. And then play number 2, Nibbus. This is the Russian play. Remember, they spun off, went to the EU or the UK. Now they do like AI core weave. It's core weave pretty much. I don't really care what they do. I don't even know. It does all sorts of things. I flipped it, but long story short, core weave went crazy. I even sold one of my plays for 3,000%, like $40 into like 1,300 on core weave, and everyone's going crazy on core weave. So Nibbus is getting pumped. I made a flip on it, but just be careful with it. The options are kind of weird. And see, at the end of the day, core weave is still getting that juice. So if the money in the market is feeling good and there's liquidity, I'd follow it. Otherwise, I wouldn't. You might just be buying the bag, and then the money goes back to core weave, or maybe they both stop. So I sold out a lot of core weave plays. I sold some short-term free ones, sold one of the June ones. I sold other weeklies. I got a lot of profit today on the Wiver core weave. So watch out for that. And Nibbus, that's play number 2. And then finally, crypto. Oh, okay. Well, MSTR and Beto. Or not Beto. Why'd I put Beto? I meant iBit. So I made both of these plays when I told you guys about crypto. And MSTR, what happened, my plays are down now, but the first week, the MSTR plays went crazy. And they hit. and they were up like 40%, and they killed it, but I'm a greedy bastard, and I was like, crypto, so that's why I held it, you see? So the MSTR plays, when they move with the Bitcoin, they go up a lot, and they'll get you more than the IBIT. But once it starts chopping, even at the highs, they're going to fucking kill you on the MSTRs. They'll murder you with zero shame. And then fucking Michael just laughs to the bank, just fucking knocking out your teeth like a fucking whack-a-mole. You know what I'm saying? Dude, I'm telling you, Michael Saylor is like an evil Bitcoin clown at like a carnival. And then he just go through and just taking all the fucking premium, just throwing Bitcoin. He's like, it's popcorn, never mind. And then you got to watch out, especially on a short-term option. So very deadly and dangerous. That's why you should get a long-term. And don't get a Bitcoin tramp stamp. That's the other guy. Bitcoin does wild. I don't know how. All I did was make a cult. You know what I'm saying? I hit big on Bitcoin. I made a cult. But all these Bitcoin people are weird. Just keep in mind, I am one of these Bitcoin. We're fucking loony. Okay? So just be careful. I'm still looking for a tooth broker, if you know anybody. That was a Michael Saylor tweet. Don't at me. But point is, MSTR, it moves faster. It'll get you a bigger gain, but it doesn't handle the holding well. It doesn't hold that good. But the IBIT, that's the ETF. But the near the money with time, oh, dude, these things, they went up. They barely went down or stayed break even. Bitcoin chopped around, and then Bitcoin ran, and the plays went up, and all that money is going very, very nice. So I like it. Yeah, but even the options worked very well. I was surprised by that. Like I'm saying, the theta, the chop time, it was nice. It was very refreshing. So, again, I still like the Bitcoin plays, the global liquidity. I mean, wait till fucking Japan cuts rates, and then, again, see what happens with Bitcoin. But point is, there's a lot going on there. I still think it's the risk-on asset. And like I said, if there's still going to be FOMO, whether it's slow or fast, I think Bitcoin is a winner in that instance. So keep your eyes out for that. I got my positions, and like I said, one's down, one's up. We'll see where it goes from there. But other than that, I made a bunch of different flips today. Like I said, took profits. I flipped a Boeing. I really like Boeing. I flipped NVO. And then I bought another NVO with a bunch of time. So I hit a bunch of short-term NVOs. I flipped out of them in the morning. It was up 4% in the AM and then came down. So I flipped out of the short terms. I bought a longer term. It barely moved. So that was good. Which one? There's a bunch of random pump and dumps. Again, the Nibbus was fucking fire. There was a nice Peloton. UNH, I fucking bottom ticked UNH and I make 20-30% again. I flip out of it, then it fucking rips, and then it comes down. So I don't give a shit. These are all winning plays. That CoreWeave, we took some profits. And then J&J, that play was up 40% at one point, and then it stopped. And even though the play was up after the first morning, the plays wouldn't go higher. So I sold out. I only got 10 or 5%. Got all my money back, all repositioned. But do you guys notice there was not any headlines on there was random ass headlines. All the I hit a PCVX and Myrna. I hit both of those, and we hit a Peloton. But these were the, again, everything related. Remember, I told you the COVID AdCom, the FDA AdCom. And then remember, watch HIMSS and watch this semaglutide compounding. And then be on the lookout for all the cancer drugs. Because do you guys notice how the drugs were so active today? All the drug companies were running. And even the healthcare companies from UNH down to literally biotech. So I think it was that healthcare event, and I don't think everybody knew about it, to be honest. And I think it was kind of subtle. So keep your eyes out for that, because I think you might still get that. But other than that, otherwise if we go back to following the market and heavy high correlation. So watch out for that. That is play number 3. Oh, yeah, and that's it. Wait, I already finished everything. So, yeah. And that's all. I was just telling you my plays. And then I made target both ways. I flipped my Nibbus. And that's it. Do you have any questions? The long term, you guys. I love the long term. I'm sad. I don't want to turn it to a house anymore. But I do want to turn it to a house. But I hope you guys get a house. I don't know, man. I just love the long term. You know that? And can I remind you that even minimum $200 a month, even if you never raise your deposit, most likely in a couple years you'll be able to save for a down payment. Again, I'm talking about saving your money, not buying a course, not gambling, not doing any crackhead shit. Just straight up saving your money, paying yourself 10%. That's what I'm talking about. And if you could find a way, if you make $2,000 a month, you should be saving $200. Okay? $200 a month is what you should be saving. If you have minimum $2,000 a month in income, you should be saving $200. And like I'm saying, this account is that example. This account missed some of the best plays. It never raised the deposit. It quit for a couple months, even stopped depositing. And it still was this is a down payment. Okay? So that's my daily. I'm just hammering home the long-term rants if you haven't noticed. But like I'm telling you, good results. Everybody, 9 out of 10 people love the long-term, bro. You have no idea. You have no idea. I'm telling you, bro. You have no idea. And I'm watching Chad's close on properties. I think we could set a world record. I think, when God willing, may it be his plan. But God willing, we might be able to make the most amount of millionaires in one activity. You know that? Like, for real. Because all of y'all, I'm telling you, in the long term, and you got to realize, like, look at the deficit chart. And like I was telling you guys a couple weeks ago, man, the world is changing. Even look at it's crazy. And the financial world, the people in charge, the new talent, the new lack of talent, call it whatever you want. But, dude, it's going to be a whole new world, man. And I really think there's an opportunity, and you see how things are. So owning quality assets, being able to save, being able to keep money, grow it, build your purse, bro. I'm telling you, this is a skill. It's a skill, and it's a good thing, and you're going to have ammo. You see what I'm getting? All you want to tell me you a warrior, you got to have the long-term ammo. And that's what I'm saying. This is going to be ammo for a house, and it's opportunity ammo. Opportunity for a house, a business, maybe more stocks, maybe more dividends. Either way, so I really hope, man, because you see what's going on. You see how everyone goes from fear to FOMO. And like I'm telling you, budgets, government, deficit, literally Japan. I don't care if we have, Jamie Dimon was talking about downturn, and they all do their little rich person laugh, but that's not all of us, okay? Yeah, I'm rich as fuck, but at the end of the day, I'm closer to you than I am Jamie Dimon, brother, okay? Don't you ever forget that. And we got our goal here and what we need to do, and that's why I'm saying, like, he is right, though. Downturns are opportunity, and you will earn your stripes. But I'm telling you, man, there's opportunity, and it's not. You don't have to be the most talented. You don't have to be bro. Listen, like the guy who come home from battle to tell the story hid. Oh, they don't. Shit, yeah. Y'all don't realize. You know what I did this whole fucking year? I hid in a fucking corner. I hid. And then you know what I did? I poked the bear at the last second. And then I went home back and I'm like, look it, I defeated the giant. That's what I did. You could call it a snipe. You could call it just all I did last minute. You don't have to. Do you get what I'm saying? Well, you don't have to fight the whole entire battle. That's word to UNH stock. That's word to all of y'all catching fallen knives. But yeah, man, you just got to stay alive. And you know what I'm saying? And like be good. That's why I'm saying with whatever happens, short term, long term, midterm, these opportunities, man, being able to save, build up, take advantage of the up and down. And as we go through this, bro, all you got to do is stay alive. Let everybody go through back and forth. But like I'm saying, bro, there's a long-term plan that works. And if you've watched it even up into this moment, You know what we just went through, bro. We just went through one of the hardest half a decades in the last 100 years. So if the long term came out, looking pretty nice, I think that's word to holding high quality assets and you keep saving. And I think some of you are seeing how fast it compounds. And then you hold the money, and then you are going to be learning to grow and hold money. And like I'm saying, the most money you've had, and you're learning to handle it and keep it safe and not be emotional. Look at you develop. Oh, they don't feel me, bro. So, amen, bro. That's my long-term rant. It's all exciting, but could take minimum 5, 10, 15, 20, 25, 35 years. The point is, if you don't need the money, man, that's it. And then, again, we talked a lot about selling strategically. So seek out those opportunities. You have the ammo. You know what I'm saying? Do you think Wall Street is going to find a way to bring us down? I mean, maybe it'll just end up being Japan blowing up. That's the sad part, because at this point, I think unless they could brainwash everybody somehow with like a fear campaign, God knows what it could be, you would just need a real black swan. Something that actually again, what if Japan goes through another carry trade crisis, they blow up, and then it leads to another issue, and then all of Asia gets rocked, and then we're in the middle of the trade deals, and then maybe Powell will cut. Honestly, even with the Japan thing now, this is what I'm saying about today, the funniest part is dude, maybe Powell isn't that political. Maybe Powell was just maybe Powell is just waiting for Japan this whole time. Because I'm telling you, I don't know though. Because again, if the U.S. cut rates, I don't know how it would have played out in Japan. But when it's all said and done, it's just dude, just don't forget, Japan's a big deal, and now it's think about it. We've been following Japan, but it hasn't really, disturbed us too much. But now it's wait a minute. So, like I'm saying, maybe that, because, fucked up way, I think Powell would be more willing to cut rates or honestly, they'll just do what they did back in the day. They'll create a fucking Fed dollar swap line between the Fed and Japan. Most likely, they'll give him a swap line. But other than that, though, it's I think Jerome Powell would actually be more willing to cut rates if Japan got in trouble than if Donald Trump crashed the whole entire economy. Yes, I don't think so. That's the funniest part, is that we think he's probably just been waiting for Trump, and tariffs, but this whole time he's just been waiting for fucking Japan to get through this shit show because he knows he has to bail him out. But yeah, ain't that funny? You would like to know my take on is that SLV or LV? Oh, gold and silver. We talk about it. I like physical gold and silver, but I don't know. I'm not, I'm not, maybe talk to Peter Schiff. But I think silver is industrial, but I own a lot of I think I might own 1,000 ounces of physical silver, to be honest with you, to some capacity, actual bullion. And then I own a lot of physical gold, but I'm not, I don't like buying it on paper. I don't like it for my long term. If you are going to do it, I don't think you should have more than 5% of your portfolio in gold or silver. I even think that's a lot. I think last time I told you 2%? Do you guys want to do this example again? Because this is what I showed everybody last time. I think it's quite fascinating. Because look, this whole entire portfolio, my biggest position is MO because it's grown. All of them have grown into how big they are. But that's 10%. But I have no more than 10% of my portfolio in any one name. And then industries, I have a lot of pharma and consumer stocks, and I'm a little tilted in that area. But at the end of the day, gold, silver, it's good to have. And I think you'll be better off the moment you're I should own gold and silver. the moment you like realize that, or you like read an article and get scared, if you just buy it and hold it, then that's it. And just never look at it. But again, what's your goal? Because here's the deal. This is what I think everybody needs to understand. And I love you, okay? Because this is a premium plus subscriber question, But I think it's good to talk about, because gold, like I'm saying, even the fucking banks are under position and it's going crazy and it's just bouncing along and holding up, and the dollar and Bitcoin, all this stuff's important. But you have to realize, like, gold traditionally, that's the irony. Like, you got to think about it. Like, guys like Peter Schiff, they're cheering and shit, but why it's moving now is not why they bought it. Like I'm saying, they would have bought more, believe me, if they really knew. But you have to think about it. Gold traditionally was a store of value. Okay, gold, beyond just transact currency dot. It's the original. So I know. Calm the fuck down. I mean, like, in the sense from like 2000s to 2010, 2015, even 2018, gold wasn't moving more than a couple percentage points a year. You bought gold, give or take the fees, it would go up, protect you in any volatility, but it would just, it was a stable asset. It was better than holding the dollar to a degree, and you didn't have to deal with any of that. You know what I'm saying? But as of late, with all the money printing, COVID, crisis, this, that, rates, dude, gold is moving. It was one of the leaders last year. It's moving 30% in a year. What are we talking about? So gold is not stable right now. That's the thing I don't like about it. I love gold. Again, my gold, I own my gold at a cost basis of around like $1,000 to like, I think $1,300 or $1,500 is the most I've ever spent on an ounce of gold in my life, besides gambling on futures. But like my physical gold, I bought it really cheap, and back then it was stable. But like, it's you can move $1,000 in a year now. That's what I bought it for. So that's why I don't like it right now, in the sense of like, I like gold, but I'm not telling people to go, and you can't like buy it at these highs and be like, yeah, I'm protecting myself. You're really just betting on central banks and money failing at this point, and deficits. You realize that? You're betting on massive, not just inflation, but just like this whole money shit kind of collapsing to a degree. But I like gold. I love it. But I don't like, again, I just don't, it's not stable like it is. Like most gold bugs, most people who have loved and admired gold, they bought it for stability. And I truly believe that is lacking right now. So here's the deal. When stability comes back, I'm a big fan of it. And I think that even more, I'd be more comfortable. Or once we could confirm, what's really, going on with the dollar, money, and all that. Or better yet, there will actually be a black swan in a crisis, and then gold is going to go down when the crisis happens. And everyone's about, I thought gold was supposed to protect me. How come gold went down? And then we'll buy it right in the middle of dog shit, and we'll still make money. So that's the trick most people aren't aware of. It's so counterintuitive. And then everyone's too scared. You see, it's like a trust fall. It's like when you go at the stoplight, when you're at the stoplight, and then you watch the other lights, and it's going to go green, and then your toddler is like, how did you know? Yeah, you know what I'm saying? My girlfriend says that, actually. So she's not, so I guess. But the whole point, that's kind of how I think it plays with that example. China warns legal action over chip restrictions. So, yeah. I hope that helps. Any other questions? It always happens. I'm telling you. It always happens. Every time something bad happens, gold goes down. And then everybody cries. And then the next day it goes up. Or then later in the day it goes up. I'm telling you, bro. Literally, even Bitcoin does the same thing. It's one of the best things. Because you could, again, you don't have to always front run. Sometimes you could be late and literally make more money with less risk because now you know what's going on. That's how all those earnings continuations hit, because essentially the market sells them off, but the fundamental data is actually like legit and it's good, and then it goes right back to it. How do you approach a cold call? Oh, bro, you should have. They just had a Colt Real Estate live stream with like the agents. You should have been on there, bro. I can't give you that answer on Colt Real Estate Day. The number of deposits to put towards a backbone investment for a second house. Anything. You save 10% and you get a good deal. So I think the property is going to define it, but, you know, make sure that you're able to cover expenses. And then as far as your first house, hopefully you got some good time under your belt, so you're kind of familiar with just the work required of managing a property. But I don't like too strict of a, you know, I'm not Dave Ramsey. You don't have to kind of have that, but it's just more let the deal come to you. Because right now, I'm going to tell you right now, you are not going to find, like most of you guys, unless you are buying cash, you're not just going to go find a property and then like get rental income and cash flow. So if you're on a loan, and like when I'm telling you guys low money down and find a good deal, you are not going to get like, it's not going to cash flow. Why? Because rents are coming down and mortgages are still high. So other than that, that's why it's like when to get the second property. I think when it's a deal that comes your way, and I don't think you should be just buying a turnkey rental, because it's probably not going to cash flow unless you're buying it cash. And at that point, I would just keep saving, and literally your long term is your second house. I'm telling you, I'm actively shopping for a house right now. And I am going to use the money right in front of you guys. I think it's hilarious because now I'm like, damn, it's literally I have $250,000 that is not in any of my other accounts. It's just sitting here. So I'm shopping with this money. You see what I'm saying? So this is my second, third, fourth, fifth, whatever you want to call it. I'm waiting for it. So like even then I'm still stacking cash. So I still have this cash. I'm still going to deposit to it. But do you see where it's like even if I find a good deal on stocks, I'll buy the stock too. But the idea is keep looking, and then when that house comes our way, then you just, like I said, you go through it and sell it. And I'm going to show you when we get to it. And then that's it. And then even if you make money on the new capital, if you have any old losers and you follow the 10-year rule, like I showed you guys yesterday, you could just trim the loser with the winner, pull even the cash that's sitting there, and when you're next escrow, put it all to the next one. So, yeah, Target's a good divvy as long as they don't cut it. Let me check the payout ratio for you. But, yeah, I mean, we've talked about it. It's decent. Any insight on the coffee biz? How so? I mean, the price of coffee beans is probably as best I could give you. You finance bros are telling you gold, or silver. Yeah, you can wait till that moment. I mean, again, it's going crazy now, and if something bad happened, and like I'm saying, there was like a calamity, it would really run. But at this point, I mean, you know, I wouldn't stress over it, and even then, even if you really wanted it, I still wouldn't tell you to put a lot into it. So as I look in target payout ratio. Payouts 50 on target? No. Yeah, wow, 50 point? Not bad. Aren't they at 4%? Habibi. It sucks. Well, you guys know it's too late now, because by the morning it's going to report. So these prices don't even matter. You can't even buy this anymore if you didn't already buy it. But yeah, so 50% still a lot. That's what sucks. Back in the day, 50% used to be a ton, but it's up there. Yeah, the yield is 4.55, 4.57. So not bad at all. I mean, it's just, that's literally just above bonds right now, but then you get Target, so you get the equity upside and the downside, but not bad. Yeah, literally 50%. So they have room. I don't think the dividend's at risk. You have exposures to the Becky ETF. But like I said, that's why I think tomorrow, I think they need to either give a real update, or I think they need to die. Just fucking take it behind the shed, kill all the hope, sandbag so hard that no matter what, it bottoms out, and then that's it. And then we wait till the economy does its thing. So maybe if it does get clapped, I wouldn't call it a diamond, but that could be a good quality. But then, dude, you know what I realized? This one sucks. Because then again, I was looking like, dude, Pfizer, they just have too much shit, and we'll see with the cancer stuff this week. But, dude, they have a 7.5% dividend. The payout ratio is over. It's like 130, and then it's still worth like 130, I think. So, like, even compared to some of the other biotech, like behemoths, they're all pushing like $200, $300 billion market caps, which is insane. But, yeah, I don't know. There's like bigger names, and that's what I'm saying. Like, Target's good, but if, I would take like pretty much give me Pfizer at its prime versus Target at its prime. Which one would you take, if that makes any sense? But yeah, Target I think is actually more long-standing. But then again, Pfizer just has short-term risk. If they could get over the capital pressures, the bad news of even like the dividend, I think, and like they don't cut the dividend, then Pfizer might very well be your diamond. It just sucks because it's covered in dirt and could very well be a rock. That's why I haven't bought more yet, but it's at a good price that I like. But yeah, literally right at that like 24 we've talked about. It just hasn't moved comparative to the other biotechs. So like I told you, biotechs are in a deep discount right now, but the problem is that Pfizer didn't really go down as much this year. It was already down. So other names really got clobbered. So it's like, man, if Pfizer had like a Target dip and it was down still like 30%, 40 on the year, I would buy it. I think that would literally be the diamond. Again, UNH is just a broader healthcare play. Again, I think the only risk is that you get trapped in it a little longer than you're expecting. But it's a good company as long as there's no future problems. There's good long-term upside. But if there is more future problems or you got to work it out, I mean, you're just going to dance around. Again, I mean, the best example is Humana. Humana already did this for different reasons, but it's a stock that traded very similar. And it did the exact same thing. Even down to like we bought the other dip and then you still got slashed. Then it rockets up. Like, watch. Just wait. Mark my words. Just wait how annoying motherfuckers are going to be when UNH does this. And then when it does this again, I'm going to have to be like, oh, you see what I'm saying? Point is, it's high risk, high reward, and all of this is going to take time. Oh, that's why I'm saying it's like I genuinely bundle UNH into like 5 other stocks in that whole area. I was looking at MPW as well too, man. But I want the fucking rates, man. We need the fucking rates to chill the fuck out, but it's up on the year, which is crazy. So maybe as we wait our catch, if it ever goes down, if this comes down to like break even on the year, I'm fucking down. So yeah, well, UNH is a good company. It was a cash flow. It dropped a very big amount. You don't watch companies drop like that, but again, they had a lot of bad things go on. And then again, they like cut their earnings, and didn't Homeboy like abruptly leave and all that? So yeah, they had a lot of different things, but we'll see. No, UWMC, I actually would avoid it for a little bit. So we have it in Colt Sister. You know, she's a liberal. She deserves it. I'm just kidding, but they're not bad, but you'll notice they're not doing as good compared to other real estate companies. So I heard some shit. I don't know how much weight, but knowing what I know about them, it tracks. So I think they have a lot. Any sort of credit issue. Again, Japan If that leads into anywhere else, I think UWMC, just I would avoid it for a little bit. I do like I like Arquite a lot now, because again we're gonna get Arquite through our Redfin, but dude, they're quietly like Citron. I was telling you guys before, but I agree. I guess we both agree, dude. They're quietly building a powerhouse for real estate. I do have UPS Insights, yes. That one stopped moving too, but that one's still down, I believe, 30 on the year. Let me see. Let me check my volume movers. Because my volume mover list, it'll tell me the year to date. But yeah, I do like UPS a lot. See, it's even chilling, bro. So that's why Target will definitely be watching after their earnings. But yeah, this is a great deal. You get good, a good discount, Habibi. I'm not looking at UNH, so I was just answering the question. So, do you understand why I don't appreciate it when you guys do that? I genuinely think some of you guys have bad intentions. I don't know if you're doing it on purpose or not, but I was just answering the UNH thing, so that's what I'm saying. I wouldn't frame it as if I'm like eyeing that. I am eyeing UPS. I am eyeing Pepsi. That's when we talked about, like I just said, Pfizer or Target. Those are ones that I'm actually eyeing. But yeah, we were just going over the other one as an example. Yes, damn, Merck is down 40% on the 12-month. So I have 12-month and year-to-date. Yeah, UNH is down. Target's number 2 on the list. So Merck, that's crazy. And again, Merck, J&J, Pfizer, they got big cancer stuff this week. So yeah, look, Merck, great company. Again, Merck is still a $300 billion company, even after the drop. But they're down 40% in 12 months, and then they're down 21% on the year. So that's number 1. These are just off of, so I could be missing names. I'm just going off the volume leaders today. So these were very actively traded stocks. And then I'm going in order of year-to-date losses, and then the gain, and then the 12-month loss. So Target's the next one. They're number 2. 38% down in 12 months, down 27% on year-to-date. Then number 3, it was just even worse, UNH. So they're down 38.7 12-month, 36 year-to-date. And then Intel, believe it or not, are you ready for this? Intel is still down 33% in a year. In the last 12 months, Intel is down 33%, and then it's up 6% year-to-date. And then our friend Nike's. Damn, Nikes, I wish I bought it. See, I like Nike a lot too, because I wish I got Nike at 53 and I don't want to pay 10, 15% more, but they're down 32% in the 12 months, and then they're still down 17% year to date. Bro, you could get, yeah, that's beautiful. Even, I didn't know, it's still down 17% from January. That's crazy, bro. That's crazy. Like, that's really good. Yeah, that is the problem with losers, but if it's still deep red like this, I don't know, man. That's money in a weird way. So I'll be patient. I'm not going to force it, but I don't know, man. If you ever get FOMO, and that one kind of still lags behind. I hate this fucking move off the bottom. But, yeah, still down 17 on the year. So, like I'm saying, it was down even more, though. That's the thing. I think it still has downside. And that's why it's not as stable as we would hope. So, that's Nikes. Who's next? Oh, AMD down 30% on the 12 months. And then down 6% year to date. I think they popped after hours. And then Pepsi down 27% in the last 12 months. And then down 13% year to date. And then Danaher and Conoco. And then Pfizer. Pfizer's down 20% in the last 12 months, but then it's unchanged. 0.13 year to date, it says. So, yeah. Yeah, that's just it. O is not on that list. Oh, wait, I was just organizing the S&P 100. But, yeah, and that's a good place to start, though. S&P 100, though, these are some good names. But either way, we will see. Pizza is still down. I don't know the year-to-date metrics. But I think they're down on both. That's why I bought it. But that's a growth one. Some of these, like all the plays I just named, I think are substantially higher quality than pizza. So, and that's the good thing. That's what you want. Again, you want the high quality. Again, if Merck doesn't die, that's amazing. If Target, you scoop it up at these prices and they go back to how they were doing a couple years ago, amazing. If Nike gets market share, amazing. UPS, oh, dude. These are, like, you see what I'm saying? These names. Papa John's actually has a good brand name, but unfortunately, it's relatively dog shit to these companies that I have listed here. So, yeah. But I still like it. That's why I went small. Pizza. But on that note, Chad, save your money, get a long term, and now sleep well. I will see you guys in the morning, but I must depart. So I love you all. Finger to the sky and pray tonight, okay? Pray and sit there silently. And I hope you get something out of it, but I'm telling you, he will speak once you are done saying everything, when you have nothing else to say. Our hearts are loud. Our minds are loud. You know that? Trying to figure everything out. It's a loud world you live in. So, my brother, be at peace and you know, enjoy and embrace the silence. Learn to be still. I said, not too many people in this world. Go ask the philosophers. They'll tell you. Just quiet. A man in his mind. Just alone. You know, it's a weird, oh man. So, amen. But pray. Okay? Finger to the sky, baby. Have a wonderful evening. And hard on.